Are you ready for 2025? The IRS just released some massive changes coming to the tax code. And if you don't know these updates, you can miss out on valuable savings that will cause you to pay more taxes on your next tax return. In today's video, we'll cover the updated standard deduction amounts, new tax brackets, retirement contribution limits, changes to HSAs and bonus depreciation, and other critical changes that will have an impact on your financial planning. Some of these updates are game changers, so stay tuned to make sure you're prepared. And by the way, if it's your first time here, my name is Navi Maraj. I'm a CPA and tax strategist who helps entrepreneurs and individuals like you save thousands of dollars in taxes. I do this by creating free content right here on social media and through a comprehensive tax strategy course available on my website at navimarajcpa.com. Now that you're here though, let's jump right into the 2025 updates. Let's start with the updated standard deductions for 2025. The IRS has increased these amounts to account for inflation. Here's what they look like. Single filers and those married filing separately, $15,000. Married filing jointly and surviving spouses, $30,000, and heads of household will be $22,500. These increases mean more of your income will be shielded from federal taxes, offering you greater savings because less of your money is subjected to tax to begin with. Next up are the tax brackets. The IRS has adjusted them for inflation as well. Here's the breakdown for 2025. You can see the changes for those of you filing as single, married filing jointly, married filing separately, and head of household have all changed. These changes could significantly impact how much tax you owe, so make sure to review your tax plan accordingly. By the way, not to get political here, but if anyone ever tells you that inflation is down year over year, but the IRS continues to increase the standard deduction and widen the income tax brackets, you're being gaslighted. The rate of inflation may decrease compared to the prior year, but there is still inflation or else the IRS wouldn't increase the standard deduction or widen the tax brackets. Okay, let's move on to HSA contribution limits. For 2025, health savings accounts also come with higher contribution limits. For individual coverage, it's $4,300. For family coverage, it's $8,550. Now, if you're age 55 or older, you can add an extra $1,000 as a catch-up contribution. This makes HSAs an even more attractive option for tax advantage savings. Also, here's a quick pro tip. If you and your spouse reach the age of 55, you need to own separate HSA accounts in order for both of you to contribute the additional $1,000 catch-up contribution. If you want to learn more on how to strategically use your HSA to save the most amount in taxes, you can check out the video which discusses how to write off your health insurance premiums and save an additional 15% on your health insurance premiums. My video editing team will put that video up here so you can see where it is on YouTube, all right? So if you operate your business as an S corporation, you could take advantage of even more tax savings, not just saving you income tax, it's saving you FICA taxes. For those of you who don't know what that is, that's Social Security and Medicare, okay? Flexible spending accounts. FSA contribution limits are also increasing in 2025. You can now contribute up to $3,300. That's up from $3,200 in 2024. And using these accounts can save you on taxes while covering your medical expenses. Just remember that with the FSA, that it's a use it or lose it plan. So be sure to get reimbursed for your medical expenses prior to the end of the year to ensure you don't lose that benefit. Now, before we dive into some of the retirement contribution limit changes in 2025, if you're finding this video helpful, do me a quick favor, hit the like button, subscribe to my channel, and leave a comment below. Your support helps me create more content just like this, and I'd love to hear your thoughts and what questions you might have, and I'll try to address them when I can. Now let's talk about IRA contribution limits for 2025. These are great tools for saving for retirement with either tax-deferred growth or tax-free withdrawals. Under age 50, the contribution limit remains $7,000. Age 50 and older, the catch-up contribution adds $1,000, bringing the total to $8,000. It's important to know that the eligibility to contribute to a Roth IRA depends on your income though, right? If your income exceeds the threshold for a direct Roth IRA contribution, you might want to explore a backdoor Roth IRA strategy to still take advantage of tax-free growth. Okay, let's move on to 401k retirement savings. So for your 401k employee salary deferral, the limit increases to $23,500 for 2025. Previously, that was $23,000 in 2024. And that's for those of you under age 50. There's also something called catch-up contributions, right? So you can do an additional $7,500 for those age 50 to 59, or if your age is 64 and up. It's now $11,250 for those age 60 to 63 under the new super catch-up rules, right? So the total 401k contribution limit though is still a total of $70,000, which includes your employer matching and after-tax contributions. These changes give you more room to save for retirement while reducing your taxable income. I got a new video that just dropped regarding 401ks and the different ways to contribute, which includes the voluntary after-tax contributions, the employer match or profit sharing, alternative investment options rather than just using your mutual funds and your ETFs, and some unique 401k withdrawal rules that nobody talks about that allow you to withdraw penalty-free before reaching age 59 and a half. So definitely check that video out for more information. Let's move on to Section 179 and bonus depreciation. So for those business owners out there, Section 179 and bonus depreciation are critical tools that you must understand and use in your business to save money in taxes. The Section 179 deduction remains at $1.16 million with a phase-out threshold of $2.89 million, okay? For most of you, you don't have to worry about those thresholds. However, bonus depreciation drops to 40% in 2025. In 2024, it was 60%. This means you'll still be able to deduct a significant portion of your qualified property placed into service, but at a reduced rate compared to those prior years. Gone are the days of 100% bonus depreciation. We'll see if the Trump administration brings that back. By the way, although bonus depreciation dropped to 40% in 2025, you can still deduct a larger amount than 40% of the cost of, let's say, a business vehicle, for example, okay? The key is that your tax advisor needs to know how to stack Section 179, bonus depreciation, and maker's depreciation to maximize your deductions. I taught a masterclass on this topic, and it's available for free right here on YouTube. As I mentioned earlier, I teach entrepreneurs like you how to save thousands of dollars in taxes. Imagine joining Daniela, who saved over $30,000 in her first year, or Jeff now saving over $25,000 annually, or maybe even Valerie, who saved over $10,000 in just her first year alone. And there are many other use cases and examples where people have saved thousands of dollars using the strategies that I teach in the course. These results are possible because of my unique 3-step process that I use to help you unlock your tax savings. The first thing we do is I help you build a strong foundational understanding by teaching you how business taxes work and the accounting fundamentals. So here you'll learn about the various taxes your business faces, different tax classifications, how your business structure affects your taxes, right? All of those things are in the foundational level. Plus, you're going to master the accounting equation, journal entries, the profit and loss statement, the balance sheet. Many students say that they get their money's worth from the course from just that foundational section alone. But then you're going to learn the powerful tax strategy. So nothing is held back. Discover how you're going to save thousands using an S corporation, or hiring your minor children can reduce your taxes, and how to contribute over $70,000 in your retirement account in a single year, and that could be in a Roth account, okay? And third, you'll implement what you learned step by step with me. So together, we're gonna put these strategies into action using QuickBooks, ensuring you actually do save every possible dollar. This isn't just about the foundational knowledge and learning tax strategies. That you can do for free right here on YouTube. It's about implementation so you actually realize the tax savings you've learned about. Most students complete the course in just a few weeks, and here's the best part. I offer a 30-day money-back guarantee, so no questions are asked. The risk is all on me, not on you. So if you're ready to start saving thousands of dollars, visit NaviMaradCPA.com or click the link in the description below to learn more and preview the course content. And remember, if you learned something in this video, subscribe to my channel and click on the notification bell so you'll be alerted when the next one is released. Or if you can't wait and you want to learn more right now, click right here to watch another one of my valuable videos, and I'll see you there or in the course.